What if there is a chart pattern that can tell you what is happening in the market? What if there is a chart pattern that can tell you where the institutions are trying to push the price? What if there is a chart pattern that can tell you when the trend is coming to an end? Yes, there are two powerful chart patterns that most profitable traders use. Some people use it as their own strategy, while some people use it for confirmation. In this video, I'll show you what you should do when you see these two chart patterns in your trading chart. I would also tell you where to put your entry, your TP, and your stop loss. At the end of this video, I'll give you a bonus tip that can help you to maximize your profit anytime you want to trade these two chart patterns. I'm J. I'm a gold trader. I make videos about trading and cryptocurrency updates. So if this sounds interesting and you want to receive more videos like this, make sure you like this video, click the subscribe button and turn the notification bell on. You can easily get notified whenever a new video like this drops. Without further ado, let's jump in. Before I show you what these chart patterns are, let me refresh your brain on what a chart pattern is. You have to understand that the market doesn't move in a straight way. It moves in zigzag way. So most of them, it creates patterns. And most of these patterns can tell you where the market is going to go and when it's coming to an end. So first, you have to understand what is a trend. In the market, we have uptrend and downtrend. There's a chart pattern that you can spot on uptrend, and it will tell you that this uptrend is coming to an end. There is a chart pattern that if you spot on the downtrend, it means that the downtrend is coming to an end. If you are a trend lover and you like buying when there is uptrend, then if you see this chart pattern on uptrend, just get ready for reverse. And this chart pattern is called double top and double bottom. Let's first look at what is double top. Double top appears on top of a chart where there is uptrend, and it happens on this way. If the market is trending up, first of all, it will hit a resistance level, come back and hit a strong support level. Then it will go back again and retest that strong resistance level, then comes back and break the next support level. Once it breaks it, put your entry here and your stop loss here and target almost the height of this ranging. So when you spot this double top on uptrend, just get ready for trend reversal. It works 90% of the time, and most people use it for their strategy, while some people use it for confirmation. Most people that use it as a strategy always look for it in 1 hour time frame or 1 day time frame. But most people that use it as a confirmation look for it on 15 minutes time frame or 5 minutes time frame. It doesn't matter the time frame you use, but if you want it to work more effectively for you, just look for this type of chart pattern on 1 hour, 4 hours, 1 day, and higher time frames. Now let's see this chart pattern live on our chart. Head and shoulder pattern. As you can see, this is an uptrend. So we have confirmed that this is uptrend. So the next thing we have to do is to come to 4 hours time frame to look for a trend reversal or short term reversal. As you can see from this place, the chart pulled up, kept pulling up to this place. Now as you can see, it's retested this level, then come back again to this leg line. Now it goes up and to that particular level again, and now it came down and broke it. If you look closely, you see that there was a fight here. That was a strong fight here. If we go to lower time frame, you will see it clearly. So you should have entered a trade here and take profits here. Or you can consider the trend line as well. Since it is a short-term trend reversal, you can consider the trend line as well. If we check Bitcoin as well, as you can see, Bitcoin was trending up from here to here. Now, if you go to 1 day time frame, we look, this is M pattern. As you can see, Bitcoin had M pattern. It tested above here, now broke the leg line, and since then, Bitcoin have been going down. As you can see, this one is M pattern as well. Bitcoin tested up, now come back and to this leg line, had some fights here. Now went up and touched the level again. Now come back here and broke it. Now after the broke, so after this level got broken, the price kept going down. It is always important to follow the trend. So if you like following the trend when there is downtrend, so always look for double bottom. When you spot double bottom on a chart, it means that the downtrend is coming to an end. Now let's see how this chart pattern looks before we spot it on our charts. If there is a downtrend and it hits a support level, then comes back and hits a resistance level, then come back again and hit the support level again, then comes back and break this resistance level, just put your entry above the leg line and your stop loss below the leg line, and your target should be up. The next thing is double bottom. Keep in mind that this chart pattern must not happen on a strong uptrend or a strong downtrend, but in case you spot it on a strong uptrend or downtrend, that will give you a high probability trade. But for this is just a short-term downtrend. The price pulled down from here to here, so now it tested this trend line, went up, come down again and tested the trend line. Now came and broke this strong place. So after it got broken, since then gold have been pulling up. This is a double bottom and it means the downtrend have come to an end. This is a short downtrend and this is a trend line. So if you combine this with this trend line, this should supposed to have given us a high probability trade. Since then, gold have been going up unstoppable, and here it is still going up. The second chart pattern is head and shoulder pattern. First, when you spot it on uptrend, it means trend reversal, so you position yourself for downtrend. But when you spot it on downtrend, it means trend reversal and you position yourself for uptrend. When you see it on uptrend, it is head and shoulder pattern, but when you see it on downtrend, it is inverse head and shoulder pattern. So let's start with the uptrend. When you see this on uptrend, it is head and shoulder pattern and it happens this way. So there is an uptrend, it hits a resistance level, then comes back and hits this place. This could be a leg line or a strong support level. Then goes back with a higher high, higher than this one, then comes back and hits that particular place, goes up and produces another high, almost the same height with this previous one, break it. Just put your entry here, your stop loss above the leg line, and your profit target should be the next resistance or support level. The next thing is head and shoulder pattern. This is uptrend from here. From here we had an uptrend, and here the price came here and produced neck, then came back again, goes up and produced head, now came back again and now produce another neck. This is the first neck, this is the second neck, and this is the head, and now this is the leg line. Once it got broken, put your entry here, your stop loss above the leg line, and your take profit supposed to be here, or you can consider this trend line. So when you spot this head and shoulder pattern in uptrend, position yourself for downtrend, so you go sell or short. But when you see it on downtrend, it is called inverse and head pattern. It looks this way. That's a downtrend, it come and hit a support level, then goes back and hit a resistance level, then comes back and produce a lower low, lower than this one, then goes back and hit a particular resistance level or leg line, then comes back and produce a high with the same height with this one, then goes back and break this leg line. Once it gets broken, just put your entry after the breakout and your profit target should be the next key level. So when you spot these two chart patterns on your trade, just position yourself for trend reversal. It works 90% of the time. Most profitable traders use it, and you too can use it. Don't sell just because you saw a double top, and don't buy just because you saw inverse and head shoulder. There are other things you have to consider, like the economy of the country or the currency you are trading. At the beginning of this video, I promised you a bonus tip that can help you to maximize your profit from these two chart patterns. And here is the bonus tip. 1. When you are waiting for the breakouts, always wait for 1 hour candle to close before you enter. This will reduce your chance of getting fake outs. The next thing you have to consider is wait for a retest. Most times when there is a breakout, most of the time there is a retest. So it is important that you wait for a test before you find a signal to enter the market. And the most important, which is the last one, is risk management. One of the things that differentiates a gambler from a trader is risk management. Don't forget to join our community using the link in the description of this video, and don't forget to subscribe to this channel for more videos like this. If you have any question, don't forget to drop it in the comment box. For now, goodbye, good luck.